Silver to hit $36.50 an ounce? Here's how. Thank you so much for tuning in. I am here with Lior Gantz, CEO and founder of wealthresearchgroup.com. Lior, how you doing?
I'm doing well. Thank you for having me.
Absolutely. I'm excited to have you on here. You have been making the rounds on various YouTube channels, to say the least. I've seen you on Yankee Stacking, Silver Dragons. You're definitely an individual who likes to get out there and talk all things precious metals. And for my viewers who may not be familiar with some of the videos that you've been in recently, do you mind giving them a little bit of a background on yourself?
Absolutely. My story with investing starts when I was 13, and basically by my father's bankruptcy in his family business, he said, "Leo, you need to get working if you want to go out, have friends, etc." So I just can't afford to sustain you as a child, as a 13-year-old, and I had two other brothers, etc.
Right.
So started babysitting, age 13, saving up the money, and by the time I'm 16, the banker says, "Lear, you have some money saved up here." This is 1997 when I started saving, and it's June of 2000 when this banker tells me, "Let your money work for you." And I don't understand, obviously, what he's saying. I'm 16.
Right.
He says, "Get your parents, they'll sign a waiver, and you, as a minor, can start trading equities." At the time, it was mutual funds. And it was like 3 months after the dot-com bubble started bursting.
Mm-hmm.
And that's when I started investing, age 16. In 2008, with the real estate crisis, I came to the States and went to Phoenix, Arizona, trying to find foreclosures and cash deals, and America was on sale. And the first thing I usually do when I come to the States is I browse the Barnes & Noble, and I start picking up books and reading them. And that's how I got to Mike Maloney's book on gold and silver. And that's when I started accumulating gold and silver back then in 2008. And then in 2010, got to mining shares really heavily. Mm-hmm. In 2016, I said, look, I think this was end of 2015. I think gold is going to bottom if the Fed is going to start raising rates. And the second they raised rates for the first time, December 15, 2015, I started building the website Wealth Research Group into a free newsletter because I saw how much information was just partially scattered out there, and no one really, or not many understand, because it's just not taught anywhere. What are precious metals? How important are they for a portfolio, etc.? That's how I got started with the newsletter.
Gotcha. Very, very, very cool background, to say the least. There's not many children in the world who would be interested in investing at such a young age. You said you were doing this at 16, and I was playing video games. As you're in the middle of investing, I'm playing video games and stuff. And correct me if I'm wrong, you're also very well traveled, something like 40 countries. You've been around a little bit.
Yeah, 45 countries at this point.
Holy cow.
Up until the last year with what happened, we were traveling a lot with myself, my wife, and our daughter. We just like to explore, and we've been to first world countries, second world countries, third world countries. The gold silver community in the United States, I have to say, it's one of the most developed anywhere in the world.
Oh,
for some reason, it's even though less than 1% of the population is involved in precious metals, it's even worse in other countries. It's just pathetic to see because it makes so much sense. I've always said that they ask Warren Buffett every year in the shareholder meetings. They do like a Q&A, and they let the shareholders ask a question. And every year I submit this question. They never asked them, but if he for the life of him, for the last 30 years, he's held on to so much cash. It's like $140 billion right now in cash. Just think 20 years ago, if he would have taken half of the cash that Berkshire had, and just instead of holding it in treasuries or in US dollars, if he would have held it in gold,
right,
would have been up 6 or 7-fold on the cash position.
Yeah.
That company would have been $1 trillion company. It would have been bigger than Facebook, bigger than Netflix, bigger. And he's out there, at $500 billion value. He could have been at $1 trillion. He lost a lot of money for the shareholders because he has this blind spot.
Yeah.
In gold. So, that's what I think. I think that the education is missing, and your channel, for example, is a platform that's almost. You're doing amazing work. People like you are training and educating people about something that should be indispensable to anyone, not just investors.
I couldn't agree with you more in terms of how invaluable silver and gold is. It's funny, like I started stacking gold and silver probably around when you started getting into it. Like 2008, 2010. I did buy a little bit like around 2006, but I didn't really start getting into it right around the time that you were starting to get into it. The one thing too, though, is, I've heard that you have quite a position in terms of silver and gold, that you are not just an individual who is investing in gold and silver mining stocks, but you're also a stacker as well, that you see a strong importance in owning and holding the physical.
Absolutely. I think, for me, it's almost like a start over fund. To me, when you own physical precious metals, that gives you so much more insurance and so much more confidence to take on other asset classes. I think that should be like the base. You know how when you build a house or when you build a high rise, you first of all you dig very deep into the ground, and that part takes most of the time. It takes like 3-4 years just to build it in, and that's to me the precious metals position, the foundation. Then you can erect whatever you want. You want to erect a 30-story building, a 40-story building, doesn't matter. The foundation is what matters. And so what I did was I calculated basically how much my family burns on a monthly basis, right? Our burn rate. And then I said, look, if there's a 2-year real slowdown, a sort of a depression, if the economy is really contracting, like we saw in 2008, but longer, if the Federal Reserve cannot paper it over, if government faith is really plunging, if it's really a credit freeze around the world, and it's hard, really hard to earn a living, and what there's layoffs everywhere, Great Depression style. If there's a 2-year process like that, then should I have enough physical precious metal to last that? And my mind is also thinking, man, if in boom times I have 2 years worth of living expenses and precious metals, in hard times, those will probably buy me more years, right?
Sure.
Okay, so what I did was I took that month, I multiplied it by 24 months, and converted that into physical gold and silver with about a 70-30 ratio towards gold, which I'm far more bullish long-term on gold than on silver in terms of, like if you ask me, hey, 30 years from now, would you rather own just gold or just silver for the next 30 years? I'll probably tell you gold. I can go into why. But basically that's the idea. And then once you get to that position, then I built new things in my head. One of them being, okay, I never want to be less than 5% in precious metals. So in other words, if those 24 months make up less than 5% of my net worth, then I want to increase that 24 months into 5%, et cetera, et cetera. I always try to build new things in my head to stay engaged with gold and silver. That's on the physical side. And if there's big sell-offs, no matter what happens, I buy. And I can sell later and trim it down back to 5% or back to something. But if there's a big sell-off, I like to be in there buying either physical or on the physically backed ETFs. I don't know if you know these products, but from Sprott, for example. So absolutely,
it's that's a very good analogy too, to have that really strong foundation, and make that strong foundation be in silver and gold, and then have that base, and then move on from there. And the one thing that you right now, what you were saying, and I'm like, oh boy, I really have my work cut out for me. Your number is 2 years, and I commend you for that. You say have enough silver and gold that will sustain you for 2 years. God forbid there happens to be a really bad economic downturn. And here in the United States, and just so the viewers know, my friend Lior, he's in Tel Aviv in Israel. Here in the United States, you hear a lot of people say, oh, you should have 6 months living expenses in order to, ride out the bad times. And I'll be honest with you. I mean, 6 months for many people. I mean, there's so many people here in the United States that don't even have $1,000 in the bank. I think it's almost like 70%, which is crazy. So when you say 2 years, I mean, I'm looking at my pile here. I have more, but I'm like looking at this pile. I'm like, oh man, I really have to start putting away a heck of a lot more.
I think there's a cultural difference.
Yeah.
In America, credit has been so abundant since Nixon took you guys off of the gold standard, that the banking system can extend credit to most people. The availability of cash if you need it via home equity loans, etc. It's always been there, and it's ingrained in the culture. And you spend. Americans spend. They get the stimulus money. They spend it. Nobody goes into this mode of I need a duffel bag. I need money. Idly sitting, just collecting dust. But it's not really collecting dust. If there's a 2% or a 3% or a 4% inflation, and you're holding on to fiat currency, well, you're losing 2, 3, 4% a year. That's fine, because you're not taking on any risk of equity, etc. But there's just a better way of doing it. Precious metals do not lose; they actually accumulate and compound. You look at gold from 1971 until today, 50 years. I think that's a pretty long time frame to look at what it can compound at. And you look at 6.6%. That's a lot,
right,
for gold, right? And just in the last 20 years, it's almost 10%. So you're looking at a very good alternative to cash. If you go to like officialdata.org and you punch in $100,000 in the year 2000, it's $63,000 today. That's a 37% tax on your savings.
Right.
If you've had it in gold, $100,000, in 2000, that would be $500,000 today, even a little bit more. So the difference is huge. And that's why I'm saying about Warren Buffett. It's the differences are huge. The wrong thing to do is compare precious metals to stocks and say, well, gold doesn't do anything. I should own dividend companies, etc. Not the same thing at all.
Right.
I don't look at it at all as it's savings and preservation of capital, and the portfolio management is something entirely different. So I think that is really important. Americans just do not really understand what it is to live without the availability of credit, and that's why it's a defect basically in society. Because if everyone just starts buying a little bit of silver, $20, $25, $30, buy 2-3 ounces a month, the average person could definitely buy 2-3 ounces a month and start to get fascinated with it. Once you hold it in your hand, you understand the difference between government issued currency and a commodity that has all of the attributes to be used as money for the next 1,000 years. Doesn't matter what technology will be like. It's a very unique mineral.
And that, I'm like, oh my God, quiet. I'm texting. Quiet.
Okay.
So where were we, my friend? Keep going. I'm sorry. I didn't mean to cut you off.
Oh yeah. So the human society has used everything and anything, all sorts of commodities over thousands of years, but gold and silver have played that role, especially silver. The word silver in about 70 languages literally means money, including Hebrew. So it's that is it. That's the holy grail of commodity money. So I don't understand why anyone would not own gold and silver.
I couldn't agree with you more, because I mean that's one of the things too, and I've told my subscribers and people that have come across the channel that I bought a little bit of gold just because I think I had seen a commercial on owning gold, but it wasn't something that I really knew a lot about. And then I did get a little bit of silver when my grandfather had passed away, and that kind of got me fascinated with it. Start researching it, and then ever since then, to your point about buying silver and gold, having it in your hand, and actually like seeing it, and like you start seeing it grow, and then you don't want to sell it. Whether
Absolutely.
it's like you want to hang on to it. It's like Gollum in Lord of the Rings. It's like my precious. You don't want to get rid of it. And if it's just in the bank, a lot of people, especially here in the States, a lot of people are just gonna spend it. So when it's in this form, it like you said, there's definitely something different psychologically with having silver and gold as opposed to just a bank account.
Absolutely.
And then you were also talking about how, if Warren Buffett had only just half of his cash in precious metals, he would have most likely have had a $1 trillion company on his hands. And that's just because we're seeing right now, especially silver and gold is continuing to rise. There have been some silver technical analysis reports saying that silver is possibly going to hit $36.50 in a not too distant future. Do you want to talk about that?
Absolutely. So if you look at a chart of silver going back about a year, you can start looking at a very clear range. And in technical analysis, a range is where a market is looking at a price that is between some sort of a resistance, a high level resistance, and a bottom, so a support and a resistance. The length or the breadth of that range for silver is about $7 because it's between 22 and a half. Where there's just a whole lot of buyers that come in that absolutely appreciate the value of silver, 22 and a half. It's sort of a collective global acceptance that right now that is a bargain. So it's a support. On the flip side, there's a lot of traders who see 29 and a half as sort of a exit point and say, okay, well, silver shouldn't trade over 30. In my opinion, I'm out. And so instead of waiting until 30, they sell 29 and a half. That creates a resistance. Once that resistance is breached, then the size of that range, the $7, that becomes the upside potential for the trading move. And so we've already seen twice that silver has tried to break through that 29 and a half. And in technical analysis, the third try is the most highest probability that it will break that resistance level. So if you see silver hitting 29 and a half, the risk becomes so much lower that a whole new slew of traders come in because they see, hey, that resistance has been breached. There's enough. And so many new people come into that tiny little market that is silver, and it starts pushing it up with a high probability towards the 36 and a half because that's the size of that range. Now, what should you do with that information? If you're stacking physical precious metals, it almost means nothing to you. What you would like is the price to be lower, obviously,
right?
Because you're trying to just stack more ounces. That's what you're trying to build. You're trying to build ounces. But if you're also looking at it from the perspective of trading, either the physical physically backed ETF or some leverage ETFs or the mining companies, well, absolutely you want a higher price because then they make more money as companies, etc., and their shares become much more valuable. So it just depends where you're looking at this. But in general, the key to silver and for a silver breakout is a little different than the key to a gold breakout. For silver, if you look at the DXY, which is the dollar index, it's sitting right around that 90-point range. 90 points is the 7-year support for the dollar. If it breaks below 90, that is a severe start to a very long bear market for the dollar that can 4 or 5 years. And for the past about 10 to 15 days, it's literally fighting on that 90 level. You can look at it every day and see it goes like 89.5, 90, 89.5, 90. Today it's going up about 0.5% because of the jobs report as we're doing this interview. But it's right around that area. And if it breaks below in a very affirmative way, so about goes down to about the 88 points, all of these algorithms start selling dollars because it triggers all of these support levels for algorithms that either short or go long the dollar. And man, is it very important for silver. Silver is one of the most highly inversely correlated assets to the dollar. A dollar weakness means the silver is going to fly. So that's what you should look at for silver. The 29.5 bullish sign, and where the dollar index, the DXY is it going to 88? Really bullish sign for silver. For gold, people have been saying inflation. It's everywhere. It's everywhere. And obviously, CEO calls, you see an 800% increase in mentioning the word inflation. Google Trends is at an all-time high for the world inflation. So everyone's like, there's so much inflation out there. Why isn't gold at 3,000? Or why has it had a very poor Q1 to 2021? The answer is that gold is not an inflation hedge. It means, what I mean by that is when you see higher inflation, it doesn't mean that gold is going to rise. What you want in order to get a bull market for gold, and you can look at it for the past 50 years and plot it against each other, is you want real interest rates to go down. And real interest rates is basically the subtraction between how much the 10-year treasury bond yields and how much inflation is out there. So if the 10-year bond right now yields 1.6% and inflation, meaning the CPI, is at 2.6%, then you have a situation where real interest rates are minus 1%, because that's 1.6 minus 2.6. Whenever there's negative real interest rates in the economy, gold is much more relevant than cash because you're literally losing money holding cash. Okay? So the more this trend goes negative, the better for gold. And what happened in Q1 of 2021? Well, CPI didn't change that much. The expectation of inflation was definitely out there in the economy everywhere. People were like, oh my God, there's inflation everywhere. But in real terms, nothing came out that says inflation is higher on the CPI. What happened in the meantime was bond traders started to rally yields up, and yields have gone up and up and up. And so negative interest rates became all of a sudden much closer to zero. Very bad for gold. And so you saw this dual reality where inflation was all around us reported as, man, lumber prices, real estate prices, copper prices, etc. But gold wasn't moving. And the flip side is happening right now. Bond traders are saying, well, maybe inflation isn't so bad. And so yields are coming down. And that actually makes gold more valuable. So what you're going to see in the next few days and next few weeks and months is that will come into some sort of an equilibrium. And I think that gold has a really good chance of breaking above 2,000 again, because you will see CPI going up, but the bond move is very much exhausted.
Now, let me ask you, you said in the next few months you think gold will probably break 2000. For silver, 3650. Where do you see, or when do you see that number possibly happening? I mean, I know it's hard. I mean, nobody has a crystal
There is
ball,
no,
but
yeah, even with gold, it doesn't matter. The timing of certain price targets is irrelevant. The catalyst is everything. So instead of trying to think when will silver be at 36 and a half, why don't you just look at 29 and a half as the sort of the launch pad, and you know that the risk of trading silver is statistically much lower once you pass that resistance point. That's one thing. And secondly, look at the DXY and see a real breakdown in the price of in the relative price of the dollar, and that diminishes the risk of getting into a trade on silver, because you already see confirmation of a weaker dollar. So that's for silver. For gold, here are the catalysts.
be sure to stay tuned for part 2 of this interview with Lior Gantz when we discuss gold and what's going to happen with the United States dollar. I also would like to thank these elite channel supporters. If you haven't already become a channel supporter, make sure you check out the awesome perks and join today. With that, this is Empire Precious Metals. Until next time, long live the Empire.